Now we will start our discussion under IFOS. Again, I'm not covering all the items under IFOS. I'm only covering selected items under IFOS. Are you all with me? So let's understand which all are the selected items under IFOS. Now, listen. We are about to start the first thing, that is casual income under IFOS. You tell me, what do you mean by casual income? Casual income. Income like lottery, card game, income from other game of any sort other than online. Other than online game. Because for online game, we have a separate provision called 115 BBJ, winnings from online games. Are you with me? Are you with me? So lottery income, card game, income from other game of any sort, then income from crossword puzzles, winnings from horse races, etc. will be subjected to 115 BB. And what is the rate of tax? 30% plus surcharge if any plus cess. There is a flat rate, that is 30%. Are you all listening? Say for example, I participated in Big Boss and I won 1 crore rupees. I am the Big Boss winner this season. Okay, we won 1 crore rupees. Are you all with me? If I am winning that 1 crore rupees, then that 1 crore rupees will be subjected to tax under 115 B. And what is the rate of tax? 30% shall be the rate of tax. Are you with me? Because we call these kinds of incomes as what? Casual income. Say, or I took a lottery. In Tamil Nadu, lottery is banned. Say I took a lottery from Kerala. And I won 1 crore rupees, the first prize. So whatever amount that I'm winning will be subjected to 115 BB. And what is the rate of tax? 30%. Are you all with me? Now, while computing this casual income, there are certain things that you should know. While computing this casual income, you have to be careful with certain things, and that's what we are about to cover. And what is the first thing? No expense allowed. What is that? What do you mean by no expense allowed? You cannot claim any expenditure as a deduction. All the incomes are subjected to flat rate 30%. Number 2, no chapter 6A deduction. You cannot claim any chapter 6A deduction from the casual income. Number 3, no adjustment of unexhausted basic exemption limit. If you have unexhausted basic exemption limit, you cannot adjust that with the casual income. So no expenditure is allowed as deduction, no chapter 6A reduction, and no adjustment of any unexhausted basic exemption limit. It is subjected to flat rate 30%. The entire gross winnings will be subjected to 30% rate of tax without any expenditure, any deduction, any other adjustment. Are you with me? Are you with me? Say for participating in Big Boss, I have appointed a PR team. Okay, a PR team, and they will keep on posting every day. They will keep on posting something related to me in the social media. Come again? And that's it. So they keep on posting every day in social media something related to me. In that case, I'm incurring an expenditure, but I cannot claim that expenditure as a deduction. Not possible, because the entire game is subjected to, entire winning is subjected to what rate? 30% rate of tax without subjected to any other deduction. Is that clear? Is that clear? If advance received after 1st April 14, will it be charged under IFOS? Yes. If it is received before 14, reduce from the cost? Yes. That's right. That's right, Ali. Yeah. So, listen. What if you are winning some online game? Say you have played some online game and you have some winnings. Okay, what to do? You cannot claim any rebate. No expenditure, no deduction, including rebate. Not possible. You tell me, what if you are winning some online games? You tell me. What's the treatment? Say for example, Dream 11 or Fantasy Cricket or Rummy Circle or Jungly Rummy or 8 to 3 something, 8 to Ace to 3 Rummy. So those kinds of game you are playing. Are you with me? Are you with me? So you're playing some game and you want some amount, then what will happen? It will be subjected to what rate? 30% rate. Subjected to surcharge if any plus cess. In while computing that also, you cannot claim any expenditure as a deduction, no chapter 6A reduction, no unexhausted basic exemption limit as well. And there's a definition for the online game. that you know very well. What is the definition for online game? A game that is offered on the internet and is accessible by a user through a computer resource, including any telecommunication device. I know that you will teach them the definition for online game, okay? They don't have to teach you the definition of online games. You better know it. So, what the department say, if you are getting some winnings from online games, that winnings will be subjected to what rate? 115 BBJ at 30% rate of tax, and that winning is not subjected to any deduction, including basic exemption limit. You will not get it. Are you all here? No expenditure, no chapter 6A, no adjustment for unexhausted basic exemption limit. Yes. Now we will cover one more thing under IFOS. That is the most important thing. This is the most important thing under IFOS. That is taxation of gifts. Are you all listening? Are you all listening? Taxation of gifts. Listen. Keep quiet and listen. Any sum of money, let's read the heading, okay. Section 56, subsection 2, clause number 10. Any sum of money or value of property received without consideration. Keep quiet. Or inadequate consideration to be subjected to tax in the hands of the recipient. Very simple. Say for example, you're receiving certain items mentioned under section 56. Either without consideration. What is without consideration? Free of cost. Or for inadequate consideration. What do you mean by inadequate consideration? You are paying some consideration, but that consideration is way too less. In such scenario, the recipient, whoever gets that particular asset, is getting a benefit. That benefit have to be valued and you have to pay the taxes for that benefit. Are you with me? Say some people, okay, or my friend have gifted me a house. I'm getting a benefit. What is that benefit? Value of house. So that value of house will be taxable in my hands under 56 subsection 2 clause number 10. And that's what we are about to discuss. So taxation of the gifts in the hands of recipient. Are you with me? So let's understand what exactly is this. So can you read the first box? When any person receives in any previous year any sum of money without consideration, and if aggregate value of money exceeds 50,000, then whole of the amount is taxable. Are you all with me? Yes, are you all listening? Yes, so we will take one example for completing this. Here, what's your name? Red shirt. Can you tell me your name? Dinesh. So Dinesh, thank God you are not Hari. Okay. Yes. So Dinesh, one fine day, is walking through the street. Okay. Dinesh, one fine day, walking through the street. He was simply having a walking. Okay. And what's your name? Next one to Dinesh. Madhav. Okay. So Madhav met Dinesh. Madhav met Dinesh and Madhav paid him 80,000 rupees. Simply. No reason. Madhav, when he met Dinesh, paid how much? 80,000 rupees to Dinesh. And Madhav and Dinesh have no connection at all. They are not relatives and all. Simply they paid 80,000 rupees. Are you with me? So if Dinesh is getting this 80,000 rupees without any consideration, because Dinesh don't have to give anything back. Are you all with me? In such case, this 80,000 will be taxable in the hands of Dinesh under which head? Under IFOS, under section 56, subsection 2, clause 10. Are you all with me? So what tax says is if any person in a financial year is getting a money without consideration and the value of money in aggregate received by Dinesh is how much? More than 50,000, then entire money received by Dinesh shall be fully taxable and Dinesh have to pay taxes for that 50. Are you with me? Say Madhav instead of 80 have paid 45,000. Madhav instead of 80 have paid how much? 45,000. Then you tell me what is the impact? No tax impact. Because IFOS taxability will come into the picture only if the value of money exceeds 50,000. Are you with me? Say Madhav. And what's your name? Next one. The one with specs. Yeah. Jay. Say Jay have given another 40,000. Jay have given another, say 45,000 to Dinesh. So Madhav have given 45,000 and Jay also have given 45,000. Then you tell me what is the impact. Everything is happening in 23-24. Okay. Everything is happening in between 23-24. Then you tell me what will happen. In aggregate, the amount is how much? 90,000. In aggregate, the amount is 90 and it is more than 50 and this full 90 is taxable. 50,000 is not a deduction. It's a threshold. Once the gift exceeds threshold, that entire value of gift shall be fully taxable. You cannot deduct 50 from that. Are you with me? 50 is actually a threshold. Once the gift goes above threshold, then it shall be fully taxable in the hands of recipient. Are you all with me? Are you all with me? Will this apply to earnings from online games too? What is the connection between earnings from online games and this? This is gift. Okay, that is under 115 BBJ. Yeah. So friends, listen. So we will read that particular point again. So can you read this point again? If aggregate value of money exceeds 50,000, then whole amount is taxable. It is not necessary that this 50,000 have to be from one person. In a year, if Dinesh receives in aggregate more than 50,000, full amount will be taxable under IFOS. Whether it is from one person or a different person, you have to always take the aggregate in a financial year. Is that point clear? That's why we have started with any PY. In any PY, any sum of money without consideration, and if the aggregate value of money exceeds 50, then the whole amount is taxable, not the excess. Whole amount will be taxable. Are you all with me? Are you all with me? Moving on with the next item. What is the next item? Immovable property being land, building or both without consideration, and the stamp duty value of such property if exceeds 50,000, then whole of such amount would be taxable. What do you mean by this? Say Dinesh continued his walking. Okay, he continued his walking and he met next. What's your name? Next one. Srikanth, SK. Say he met SK. Whenever he met SK, SK transferred his house property to Dinesh. Okay, SK what? Transferred his house property to Dinesh, and this transfer, the stamp duty value of the house property, say it is 10 lakh. So SK met Dinesh. SK and Dinesh have no connection. Okay, who is SK? Somebody. Who is Dinesh? Someone else. So when they met, they have given what? A consideration. Or say SK and Dinesh are friends. Irrespective of their connection, their relationship, if any person is giving an immovable property to another person, the person who receives the immovable property have to check one thing. What is that one thing that you have to check? Whether the stamp duty value of that immovable property is exceeding 50,000. If the answer is yes, then what will be the impact? The full 10 lakh shall be taxable in the hands of Dinesh under IFOS, under section 56 subsection 2 clause number 10. Are you with me? Are you with me? So this is another thing here is, this is per property, not aggregate. What is per property? Say SK have transferred a property and the stamp duty value is 45,000. And SRK also met. SRK also came over there. Okay, SRK, Shah Rukh Khan visited Dinesh. He saw Dinesh and given another property and the stamp duty value is say 45,000. So how much is the total value of property received by Dinesh? 90, but no problem, not taxable, because in the case of immovable property, it is per property, not the aggregate. Are you with me? Are you with me? So read this again. Where any person receives in any previous year immovable property being land or a building or both without consideration, stamp duty value of such property if exceeds 50,000, then whole of such value would be taxable. They are not saying aggregate over here. That does mean it is per property. Are you all with me? You don't have to worry about the aggregate point over here, because when it comes to the immovable property, it is always per property. That is possibility number 1. And there is one more possibility. What is that? Where any person receives in any previous year immovable property being land, building or both for inadequate consideration. What do you mean by inadequate consideration? Listen, inadequate consideration means, say, Dinesh got a house. Dinesh got a house property and its stamp duty value was, say, 1 crore or 1 crore 20 lakh. 1 crore 20 lakh is the stamp duty value of the property received by Dinesh. Are you with me? Are you with me? Mr. A have given his property to Dinesh and it is actually for 1 crore, stamp duty value of the property was 1 crore 20 lakh, and Mr. A collected 1 crore from Dinesh. Mr. A collected how much? 1 crore rupees from Dinesh. Are you with me? Imagine from the perspective of Dinesh. What was the stamp duty value of the property? What is the stamp duty value of the property? 1 crore 20 lakhs. What is the consideration paid by Dinesh? What is the consideration paid by Dinesh? 1 crore. So what is the benefit received by Dinesh? How much is the benefit received by Dinesh? Benefit received by Dinesh is 20 lakhs. Or we can say difference between stamp duty value and actual consideration is how much? 20 lakhs. So what department say? If it is for inadequate consideration, stamp duty value if more than both 50,000 and 110% of actual consideration, then difference between stamp duty value and actual consideration is taxable. Two things you have to satisfy. First you need to check whether the difference amount is how much? First you need to check whether the difference amount is how much? That means for inadequate consideration, stamp duty value if more than both 50,000 and 110% of actual consideration. We'll do one thing, we'll rewrite this, okay? There is a small error in this paragraph. We will rewrite this. So I want all of you to make a note over here. We will rewrite that. Listen, two things you have to check. Before rewriting, let me complete the example. Two things you have to check. Keep quiet. Keep quiet and listen. So, two things you have to check over there. Which all are the two things that you have to check? Number one, how much is the difference amount? The difference amount, difference mean what difference? Stamp duty value minus actual consideration. It should be more than 50,000. That is condition number one. And what is condition number two? Stamp duty value have to be more than 110% of actual consideration. If you are satisfying these two, then what is the impact? Entire difference amount shall be taxable in the hands of recipient. Are you all with me? Are you all with me? So instead of that table, write it like this. Difference amount, that is SDV minus actual consideration should be more than 50,000 plus SDV should be more than 110% of actual consideration if both are satisfied. If both are satisfied, then what will happen? Difference amount shall be taxable under IFOS under section 56 subsection 2 clause number 10. Are you with me? If you are satisfying both, that means difference amount should be more than 50,000 plus your stamp duty value should be more than 10% of actual consideration. If both are getting satisfied, then the difference amount will be fully taxable in the hands of recipient. Let's check in this example. What is the difference amount? Stamp duty value of the property was 1 crore 20 and the actual consideration is 20 lakh. How much is the difference amount? How much is the difference amount? 20 lakh. So that is definitely more than 50,000. And let's check stamp duty value. How much is stamp duty value? 1 crore 20 lakhs. And how much is actual consideration? 1 crore. How much is 110% of actual consideration? 110% of actual consideration is 1 crore 10 lakh. Is 120 more than 110? Answer is yes. So both the conditions are getting satisfied. And hence what is the impact? That 20 lakh will be taxable in the hands of Dinesh. Dinesh have to pay tax for that 20 lakh under IFOS. Are you all with me? Twin condition in the case of inadequate consideration. What are the twin condition? Number one, difference amount have to be both more than 50,000 and the stamp duty value have to be more than 110% of actual consideration. If you are satisfying both, then the entire difference amount shall be taxable in the hands of the recipient in that respective year. Are you all with me? Are you all with me? Yes, two things in relation to movable property. Number one, inadequate consideration. Number 2, without consideration. In the case of without consideration, only one thing, whether SDV of the property exceeds 50,000. If yes, fully taxable. For inadequate consideration, 2 things. First of all, the difference between the SDV and the actual consideration should be more than 50, plus SDV should be more than 110% of actual consideration. If both are getting satisfied, then the difference amount will be taxable in the hands of recipient. Now let me ask you one doubt. Say there are 2 stamp duty values, one on date of agreement and one on date of registration. Which one to take? You have to check whether you have received an advance, whether you have paid an advance, because it is a recipient, it's a buyer, whether you have paid an advance. That too, the method of advance should be either account pay check or account pay bank draft or ECS or through prescribed electronic mode. In that case, you can take the date of agreements SDV. In all other cases, you have to go with the date of registrations SDV. Are you with me? Are you with me? There are some things in online. This is irrespective of relative and others. Yes. What if I don't disclose that I got that gift? Then undisclosed income. Yes. Yes, Prem Kumar. That will be the impact. Someday over the other, they will come and pull your collar. That is VV. First you study about the compliance. Then think about the non-compliances and all. Okay. VV, first complete the compliance. First you learn a law. Okay. Then you will understand how to comply the law. Yes. Now, coming back to the point, we were discussing about the taxability of gifts, and we have completed money as well as immovable property. And there is one more thing. What is the third thing? You tell me. Movable property. What is movable property? What is movable property? Normally we say anything other than immovable property, but it is not like that. Normally that's what we say. Movable property means anything other than immovable property, but it is not like that. There is a definition. Can you read the definition? Movable property means, number 1, shares and securities. Number 2, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art, bullion, VDA. VDA means virtual digital assets. Let's understand what exactly is this point. So listen, whatever shares and securities is always considered as a movable property. Jewelry. Then archaeological collection, you know what is archaeological collection. Alright. Then Tipu Sultan's dagger can be considered as an archaeological collection. Or Tipu Sultan's tiger, that already is dead, okay. That tiger will already dead. Tipu Sultan's armor. Or tell me some other Rajas, Chola Rajas, Aditya Karigalan's dagger, okay, or Aditya Karigalan's, what do you say, sword, whatever it is, can be said to be what? Armor, can be said to be a archaeological collection. Are you all with me? So, drawings, paintings, you know what is drawings and paintings. Sculptures means what? Sculptures means, in Malayalam we say Kuttupani, I don't know what you call it in Tamil. Silai, some kind of silai we can say. Silais, yes. Then work of art, micro art and all. Work of art is a movable property. Then bullion. What is bullion? Gold coin, gold biscuit, etc. are considered as bullion. Then VDA means what? Virtual digital assets. Say for example, cryptocurrencies, NFTs, etc. are said to be virtual digital assets. Are you all with me? Now, Kalvettukal. What is that? Sculptures. Okay. Yeah, Kalvettukal. Yes. Electronic items and car are coming under this category, sir. You tell me, Ragul, whether there is electronic item or car coming under this category. No. That means I am gifting a Rolls Royce worth 1 crore rupees to you. Don't worry. First of all, I am not going to gift, okay? Secondly, even if I am gifting, you don't have to worry about the income tax implication. Why? Because it is not considered as a movable property. It is a movable item, but according to the definition, it is not a movable property. Or I am giving you a Rolex watch. I am giving you a Rolex watch or a Rado watch. Don't worry. It is also not considered as a movable property. Or I am giving you a computer, a laptop. Don't worry. It is also not considered as a movable property. I am giving you a gold ring. Yes, it is a movable property. I am giving you some shares. Movable property. Thank you for the watch. Okay. All right, very good. So, These are the definition for the movable property. And friends, listen, there are also two possibilities for the movable property. Number one, without consideration. And if the aggregate fair market value of such property, if exceeds how much? 50,000, then the whole of such amount is taxable. That simply means whenever you are receiving a movable property, the one thing that you have to check is what exactly is the aggregate value. Are you all listening? Whenever you are getting a movable property as a gift, okay, so you need to check whether the aggregate fair market value of the property exceeds what? 50,000. If the aggregate fair market value of the property exceeds 50, then that entire value shall be fully taxable. Received Rolls-Royce car as a gift, okay, not taxable. That's what I've said already, Ragul. Gold watch means jewelry. Okay, it is, you have always checked the predominant element. Gold watch is considered as a jewelry only, not watch. Not except, these are the movable properties. It's not an exception. Movable property means, this is movable property. Except this, nothing shall be taxable. Yes, watch is not a movable property according to the definition. So if I am giving you a watch as a gift, you don't have to pay any taxes. Come again? Rolls-Royce is also not taxable because that is not coming under the definition, okay. Gold car is, depends. If that gold have more value, then it is considered as a jewelry only, okay. Yes. Not exactly same, but similar. Yes. It's actually similar. You don't have to pay taxes. You got a gold ring and the value of the gold ring is say 10,000, you don't have to pay any taxes. That wait, let me complete this. That is the next thing that we are about to discuss, okay? Yes. So listen, shh. Whenever I am receiving a movable property without consideration and the aggregate fair market value of such property exceeds how much? 50,000, then department say nothing shall be taxable. Are you all with me? It does not exceed 50,000, okay? Does not exceed 50,000, then nothing shall be taxable. Now listen, we'll continue our example. Please don't talk in between. Why today everybody is talking in between? Please don't talk in between. If you want to talk, go out and talk, finish that and come back, okay? Yes. So listen. Say for example, our example Dinesh. Say Dinesh got some gold ring having a value of say 30,000. And he got some, gold biscuit, not gold biscuit, say he got some shares having a fair market value of say 40,000. So Dinesh in 23-24 got two set of gifts. Number one, gold ring. And what is the value of the gold ring? 30,000. Number two, shares. And you tell me what is the value of the shares? 40,000. So what is the total value of movable property received by Dinesh? 70,000. That is exceeding 50 and fully taxable. Because here also they are using the word aggregate. If you are receiving movable property, then you have to always check the fair market value in aggregate. If that aggregate value exceeds 50,000, that entire receipt shall be fully taxable. Are you all with me? Moving on to the next one. What is the next one? For inadequate consideration. And the difference between the fair market value and the actual consideration, if exceeds 50,000, then such an amount shall be taxable again. What is movable property for inadequate consideration? What is movable property for inadequate consideration? Say, Dinesh received a necklace having a value of 10 lakhs. Dinesh received a necklace having a value of how much? 10 lakhs. Dinesh paid 1 lakh. Dinesh paid what? 1 lakh. What is the benefit receipt? 9 lakh. You only need to check whether the difference amount exceeds 50,000. If yes, that and the entire 9 lakh shall be taxable in the hands of recipient. Are you with me? If you are receiving a movable property for inadequate consideration, then always check what? Always check what? Whether the difference between the fair market value and the actual consideration exceeds 50,000. If yes, it shall be fully taxable. If no, don't worry about any taxation. Are you all here? Are you all here? Now, there are certain few points. So we will summarize this particular point. Then Ambani would have made super profit in wedding happening. Okay, gold watch comes under what category? Gold watch comes under jewelry only. Sir, is there any way in doing sums on immobile property for inadequate consideration, taking difference of 10% on consideration or 50? Yes. There is an institute sedimental question. Okay. If a car is gifted without consideration, it is not taxed in the hands of transferee. No. Will it be taxed in the hands of the transferor? Why? Because it is a expense for you. You are not getting any benefit. Then why should we tax it in the hands of transferor? Mobile property, check-in per or check-in per aggregate. Okay. Yeah. In mobile property received inadequate consideration, it is also aggregate. Mobile property, yes, everything is aggregate. Only immobile property is per property. Everything is full. It's threshold VV. Okay, everything is full. It's threshold only. Yes. So moving on with the next one, exceptions to 56 subsection 2 clause 10. Before that, let's summarize 56 subsection 2 clause 10. What is the summary of 56 subsection 2 clause 10? Listen. 3 things. What are the 3 things? Number 1, any sum of money without consideration, aggregate value exceeding 50,000 shall be fully taxable in the hands of recipient. If exceeds 50, fully taxable. Does not exceed 50, nothing taxable. Are you with me? Number 2, immovable property being land or building or both. 2 possibilities are there for immovable property, either without consideration or for inadequate consideration. If without consideration, then what you should do? Check whether the difference between, without consideration, then you need to check only one thing, whether the stamp duty value exceeds 50,000. If yes, fully taxable. Full stamp duty value shall be taxable. In the case of inadequate consideration, you check 2 things. Which are the 2 things? Difference between actual consideration and stamp duty value exceeds 50,000 plus stamp duty value should be more than 110% of actual consideration. If both are getting satisfied, that is per property. If both are getting satisfied, then difference shall be taxable under IFOS in the hands of recipient. When it comes to the movable property, and what is movable property? Shares, security, jewelry, archaeological collections, sculptures, drawings, paintings, work of art, bullion, virtual, digital assets. If these assets are received for without any consideration, check whether the aggregate value in a year exceeds 50,000. If exceeding, fully taxable. If difference amount, that means in the case of an inadequate consideration case, you check whether the difference amount exceeds how much? 50,000. If the difference amount exceeds 50,000, that difference shall be fully taxable. Are you with me? Is that clear? Great. Moving on to the exceptions, friends. I have selected only few exceptions here. Actually, the exceptions is very long list. I have selected only few important items over here. Exceptions to 56 subsection 2 clause 10. What do you mean by exception? Exactly. Even if you get a gift from the following persons, nothing shall be taxable under 56 subsection 2 clause number 10. Are you with me? In the following circumstances, 56 subsection 2 clause number 10 is not applicable. Let's understand what exactly is that particular point. So, listen. What is the first one? However, any sum of money or value of property. Property means both immovable and movable. Received in the following circumstances would be outside the ambit of 56 subsection 2 clause 10. What is outside the ambit? It is not subjected to taxation under 56 subsection 2 clause number 10. What is number 1? Gift from any relative. What do you mean by relative? There's a definition for that. If Dinesh is receiving some gifts from his relatives, Dinesh is not supposed to pay any taxes under IFOS. Who all are Dinesh's relative? Dinesh, if he is an individual, then read. Number 1, spouse of Dinesh. That means Dinesh's wife. Then brother or sister of individual. Dinesh's brother and sister. Brother or sister of spouse of individual. That means Dinesh's wife's brothers and sisters. Then brother and sister of either parents of the individual. That means Dinesh's uncles, like father's brothers and sisters or mother's brothers and sisters. Then next one, lineal ascendant. That means Dinesh's father, grandfather. Descendant, Dinesh's son, grandson. Any lineal ascendant or descendant of the spouse. Spouse, ascendant or descendant means Dinesh's wife's, that means father-in-law, then grandfather-in-law, mother-in-law, grandmother-in-law. Everything is considered as relatives. And what is the descendant of the spouse? Not necessary. Say for example, in second marriage and all, Dinesh's spouse already have a child, already have children, no problem. That also will come under the relative definition. Are you with me? You cannot always say same. Yeah, second marriage there is a possibility. So that also is covered in the day. Surya, enakku theriyu why you are laughing. Okay, don't add any Ali, you have a lot of doubt. Okay, if it is a legal marriage, yes, possible. If it is a legal marriage, possible, yes. Everything. Come again? Yes, if it is legally adopted, possible, yes. I'll get, what is the HD TV here? It is LGBTQ, okay. LGBTQ is also there, yeah. First you go understand what is that, okay. Then you ask doubts. Now, listen, what is the last one? Go Jimma. Hey, stop, enough. So, keep quiet and listen. Spouse of any of the persons referred to B to F above. What do you mean by spouse of any of the persons from B to F? That simply means, say for example, say your brother is your relative, right? Brother's spouse is also a relative. Your sister is your relative. Sister's spouse is also a relative. Are you with me? Are you with me? Yes. Again, rainbow. Enough. Linear ascendant or descendant, can you please explain? Ascendant means father, grandfather. Descendant means son, grandson, daughter, granddaughter. That's it. Now, moving on. Relative for a HUF means any member. For a HUF, relative means what? Any member. For a HUF, if the person who receives gift is HUF, then all the members of HUFs are considered as relatives only. Are you with me? Yes, are you with me? Yes, now to the interesting factor. Listen, listen. Say for example, say Mr. A, keep quiet and listen. Mr. A is gifting something in 2020-21 to Mr. B. They are friends, okay? They are friends and Mr. A gifted a building to Mr. B. And the stamp duty value of building is say 20 lakhs. The stamp duty value of the building is how much, friends? 20 lakhs. Are you all with me? Yes, are you all with me? Yes, now, if Mr. B is receiving this building having a stamp duty value of 20 lakhs, you tell me what is the treatment? What will happen to Mr. B? If Mr. B is getting this building without any consideration, that is what is called as gift. Okay, without any consideration, Mr. B is getting this building from Mr. A. You tell me, what is the income tax implication of Mr. B when he receives that particular building? What will happen? It will be fully taxable. Under which head? IFOS. They are not relatives, they are friends. I have clearly written friends. Ragul, idu paddi modalle. Okay. Adukapra kelu. Now, Mr. B and Mr. A, they are friends and Mr. B is getting a gift of and having a stamp duty value of 20 lakh. So, you tell me, this 20 lakh will be fully taxable in the hands of Mr. B under IFOS. Are you all with me? Thereafter, Mr. B sold this building in 2023-24. Thereafter, Mr. B sold the building in the year 23-24. And you tell me, he sold this building for 50 lakhs. He sold this particular building for what value? 50 lakhs. Now you need to compute the capital gain in the hands of Mr. B. How much will be the full value consideration? 50 lakhs. How about the cost of acquisition? Here, don't take the cost of acquisition of the predecessor. Are you with me? If you are receiving a gift and that gift is taxable in the hands of recipient under IFOS, then the value that have been considered for the purpose of IFOS shall be the cost of acquisition on its subsequent transfer. Are you with me? So here Mr. B received an asset having a value, stamp duty value of 20 lakhs in 2020-21, and on its subsequent transfer, the cost of acquisition for Mr. B will be how much? 20 lakhs, and you can claim indexation from 2020-21 onwards till 23-24. Are you with me? Are you with me? Period of holding will be from 2021 to 23-24. Indexation is also from 2021 to 23-24. What if Mr. A and B are brothers? Then not taxable under IFOS. Then preceding owners, cost of acquisition you can consider. Preceding owners, period of holding you can consider. And indexation also, preceding owners you can consider, provided you got Manjula J. Shah. Are you with me? Are you with me? If a gift is taxable in the hands of recipient, on that gift's subsequent transfer, cost of acquisition shall be the amount that is already taxed under IFOS. Yes, this is what the department say. Are you all with me? Is that point clear for you? Now can you read that note? This is that note. Can you read this? If gift is taxable as above, then its cost of acquisition on its subsequent transfer shall be fair market value or stamp duty value or amount taxable under 56 subsection 2 clause 10. Ignore previous owner's period of holding and indexation is such situations. That means at the time of receipt, if it is subjected to tax under 56 subsection 2 clause 10, then you have to take that value that is considered under 56 subsection 2 clause 10 as the cost of acquisition on its subsequent transfer. Are you all here? Are you all here? Now let's solve a small question in relation to this. So, please take question number 14 and give me the answer. Yeah. So friends, please solve this question number 14. I think it's a past exam question. Yes, it's May 2022 8 mark. It's May 2022 8 mark. So please go through this question and give me the answer. Now let's solve the answer together, friends. Keep quiet and listen. So what are they saying? Mr. Lilith, a dealer in shares and securities. You have to be careful with that particular word, okay? So Mr. Lilith is actually a dealer in shares and security. He has entered into the transactions during the previous year 23-24. Received a motor car 5 lakh as gift from his friend. Sunil on the occasion of marriage anniversary. And one more thing is there. Listen. See, I think we have explained only one thing under exception, okay? See, gift from relatives. There are 2 more items. Number 1, on occasion of marriage. If you are getting a gift on occasion of marriage, that also is fully exempted. You don't need to pay any taxes under IFOS. Or if it is under a will or inheritance. So 3 circumstances are there under the exception. Number 1, from relatives or from friends or any other person on account of your marriage. Number 3, under a will or inheritance. Like that you are getting any asset without consideration. Don't even worry about paying tax under IFOS. Are you all with me? Because we have completed the related definition, then we have moved on accordingly, okay? I forgot to come back and explain those 2 other provisions. So listen. So here it is marriage anniversary, but no problem, it is not a taxable gift. Why it is not a taxable gift? Motor car. Motor car, is it a taxable gift? Is it a taxable gift? No. So we can straight away write motor car not taxable. because it is not considered as movable property. Not movable property. So this is for Mr. Lilith, right? His name is Mr. Lilith. Now, what is number 2? Cash gift of 21,000 each from 4 friends. So he got some cash gift. And how much is the cash gift? 21,000 each from 4 friends. So you tell me how much is the total money received? 21,000 into 4. That will be 84,000 is the total money received. You tell me whether it is taxable or not taxable. Of course taxable, because in the case of money it is aggregate. Are you with me? Not from one to one. All together, if your receipt in a year exceeds 50, you have to pay taxes. So here, that 21,000 into 4, cash, without consideration. 84,000 shall be fully taxable. Are you all with me? Then what is next? He got a land. Keep quiet. Keep quiet. He got a land at Jaipur on 1st July 23 as a gift from his friend Kabra. The stamp duty value of the land is 6 lakh and on the date, and the land was acquired by Kabra in the previous year 2001-2 for 2 lakhs. So he received a land at Jaipur. It is actually a gift from his friend. So you tell me whether it is taxable or exception. Taxable only. What is the stamp duty value of the land? Stamp duty value of that particular land is 6 lakhs. So we can write land SDV more than 50k, so fully taxable. So the value is 6 lakhs. Then what is next? Then next item what they are saying is, listen, Mr. Lilith purchased from his friend Mr. Abhishek, who is also a dealer in shares, 1,000 shares of ABC Limited at 400 each on 19th June 2023. The fair market value of which was 600 each on that date. Mr. Lilith sold these shares in the course of his business on 23rd June 2023. Are you all with me? And what is the final requirement? The value of cost inflation. Mr. Lilith chargeable under, compute the income of Mr. Lilith chargeable under IFOS and capital gains. They are not asking us to compute the PGBP income, but still let's compute the PGBP income as well. So here Mr. Lilith is actually dealer in shares. He purchased what? How many shares? 1,000 shares. For what value? 400 each. What is the market value? 600. So you tell me whether that difference 200 is taxable under IFOS? No. Because since he is a dealer in shares, the taxability will come under PGBP. So you have to treat it under PGBP. Market value is 600 minus purchase cost 400 into how many shares? 1,000 shares. So can you tell me the amount? 2 lakhs will come under PGBP, not under IFOS. Because he is a dealer in shares. Moving on. What is next? He received a shop building for fair market value 1,50,000. Oh, there is something I've missed. Okay, in between there is another paragraph. Further on, 1st November 2023, Mr. Lilith took possession of his residential house, booked by him 2 years back. What do you mean by booked by him? It's a kind of an agreement. Agreement you have made 2 years back. At what value? 20 lakhs. The stamp duty value of the property as on 1st November 23 was 32. And on the date of booking, it was 24. He paid 1 lakh by account pay check as down payment on the date of booking. So you tell me what is the actual consideration? What is the actual consideration? Further on 1st November, Lilith took possession of residential house booked by him 2 years back at 20. So the actual consideration is only 20. It is not 20 plus 1, 21. Out of 20, you have paid an advance of 1 lakh. Because they say booked at 20 means the total value is 20. Are you with me? So actual consideration is 20. It's a building. And actual consideration is 20 lakh. And there are 2 stamp duty values. Out of these 2, which one you have to select? You have to check whether date of agreement you have received a advance. You tell me whether there is an advance. Yes. That too by account pay check. So date of booking, you can take that particular STV, that is 24 lakhs. So SDV shall be 24 lakhs. How much is the difference amount? Difference amount is 4 lakh. And this difference amount is more than 50,000. And one more condition is there. What is that condition? Stamp duty value have to be more than 110% of actual consideration. How much is actual consideration? 20 lakh into 110%, and that will be 22 lakh. And your SDV is 24 lakh. So we can say it is more than 110% of actual consideration. So this 4 lakh shall be fully taxable under IFOS. Are you all with me? Because this is the case of inadequate consideration. Moving on with the next one. What is next? He received a shop building of fair market value 1,50,000, cash 50,000 in distribution from ABC Limited at the time of liquidation process of the company in proportion of his share capital. The balance in general reserve of the company attributable to share capital is 1,25,000. So this is actually something related to deemed dividend. That we haven't covered, that I'll explain right now. Are you all with me? This is actually something related to deemed dividend under section 222C. Let's understand what exactly is this. Listen, imagine a case. Listen, I'll explain that deemed dividend first of all. Deemed dividend under section 222C. Are you all listening? Are you all listening? Imagine, say I am a company, ABC Limited. Say I am a company, and what's my company's name? ABC Limited. Are you all with me? This company having general reserve, or this company having accumulated profit. What is accumulated profit? What do you mean by accumulated profit? Having reserves which is not yet distributed as dividend. Say there is a company having accumulated profit. That means that company have what? Reserves. That reserves are not yet distributed as what? Dividend. Are you with me? Are you with me? So this company have a reserves of say 10 lakh. This company have a reserves of how much, friends? 10 lakh. Are you all listening? Are you all listening? Say there is a shareholder, Mr. A. Mr. A is one of the shareholder, and this company is liquidated. This company is getting liquidated. At the time of liquidation, Mr. A got 15 lakhs. Mr. A got what? 15 lakhs. Say there is only one shareholder in that particular company. To make that example simple, my assumption is there is only one shareholder in the company. Are you all with me? At the time of liquidation, Mr. A got how much? 15 lakh rupees from the company. Now you tell me, imagine just before the date of liquidation, the company declared dividend. Imagine just before the date of liquidation, the company, if they have declared dividend, then Mr. A would have got 10 lakh rupees as dividend. Yes or no? What is dividend? Distribution of reserves is said to be, or distribution of your accumulated profit is said to be what? Dividend. Imagine the company, if just the day before liquidation, if they are declaring all the profits as dividend, Mr. A would have received 10 lakh as dividend. Our assumption is Mr. A is only shareholder in that particular company. Are you all with me? Are you all listening? So Mr. A would have received 10 lakh as dividend. But right now, there is no dividend distribution. The company simply liquidated and paid him 15 lakh. So if it is so, then what department say? Out of this 15, 10 lakh shall be deemed to be dividend. 10 lakh shall be deemed to be dividend, because out of this 15, Mr. A will receive 10 lakhs for the surplus balance in the company. The rest 5 lakhs is for his share capital in that particular company. Are you with me? Out of this 15 lakh, 10 lakh will be deemed to be dividend, and 5 lakh shall be treated as repayment of capital. Are you all with me? So deemed dividend under 222C means if you are a company having accumulated profit, at the time of liquidation you are distributing any money to the shareholder. Out of that distribution, up to the value of accumulated profit out of that distribution shall be deemed to be dividend. Repeat again. Up to the value of accumulated profit shall be deemed to be dividend. Whenever you are distributing something at the time of liquidation, up to the value of accumulated profit shall be deemed to be dividend. Now can you read that particular adjustment and tell me what should be the treatment? Read just that adjustment and tell me what should be the treatment. He received a shop building of fair market value 1,50,000 and he received cash 50,000. So altogether he received 2 lakh. In distribution of ABC Private Limited at the time of liquidation process of the company in proportion of his share capital. The balance in the general reserve of the company attributable to his share is 1,25,000. Are you with me? So imagine there are 2 shareholders and the total reserves is 2,50,000. So he will receive 50% of that if the company would have declared dividend. But here the company haven't declared any dividend. Instead of that, they paid in total 2 lakh. So out of that 2 lakh, 1,25,000 shall be deemed to be dividend, and this dividend shall be taxable under IF. All the dividend, whether it is original dividend or deemed dividend, taxable under IFOS. Are you with me? So what you need to do is, we will write this here, deemed dividend. Under section 222C, company having accumulated profit if distributes any amount to shareholder, then up to the value of accumulated profit shall be deemed to be dividend. And out of this, you tell me how much is the value of accumulated profit out of this? 1,25,000 shall be deemed to be dividend, because he got 1,50,000 plus 50,000 cash. His accumulated right in that particular company was 1,25,000. So out of the 2 lakh, 1,25,000 shall be deemed to be dividend. And what will happen to the rest 75,000? That is treated as a repayment of capital only. Are you with me? Are you with me? Yes. So what is next? On 1st March 2024, he sold plot of land at Jaipur for 8 lakhs. So there is something related to capital gain. When he sold on 1st March 2024. So you tell me, when he sold or he sells that particular land, what will be the full value consideration? Full value consideration, 8 lakh. How about the cost of acquisition? When is the purchase? He got the land in July 2023. And the cost have to be taken as what? 6 lakhs, because that is the value that which is taxable under IFOS in the year of receipt. It is not the predecessor's cost of acquisition. Have you seen in examination, they have given 2 lakhs also. The predecessor's cost of acquisition is also given in the question with index number from 2001, 2002 to 23, 24. If you don't study that note, what will happen? You will take the predecessor's cost and the indexation, because you will think that that's why they have given the predecessor's cost as well as the index numbers. Are you with me? Institute always plan like this, so that the students who don't have a complete idea over the topics, if they don't have a complete idea, they will make use of all these things to answer this. Are you all here? So you tell me how much should be the cost of acquisition? 6 only. And how much will be? It is short term capital gain 2 lakh. Then what is next? The value of cost inflation index is given. Compute the income of Mr. Lalit under IFOS and capital gain. So can you tell me how much is the income under IFOS total? How much is the total income under IFOS? 84 plus 6 plus 4 plus 125. 8 lakh 9,000. I don't believe you. Compute it properly and tell me. 12 lakh 9,000. This is excluding capital gain, right? Only IFOS total you are saying. Okay. I think you guys have to change your calculator, okay. And how much is the short-term capital gain? 2 lakh. And how much is his total income? 14 lakh? 9. You don't have to write total income because PGP also will come into the total income. Okay, don't write total income.
To purchase recorded lectures and textbooks, visit our website www.cajoskorean.com.